Grow changed the way millions of young investors started investing, and now the company is coming up with its IPO. To talk more on this, I am joined by Lalit Keshre, who is the CEO and co-founder of Grow. Thank you for joining us on Business Today, sir.
Thank you, Riddhima.
Sir, I want to start by asking you that, now Grow is coming up with its IPO. How do you, it started with the whole making investing accessible and easy for all. Now, what's your core goal with this IPO, and how do you plan to use the proceeds? Because most of it is off of sale, and some is 1,000 crore around is for fresh issue. So, how do you plan to do that?
So our goal stays the same. We want to democratize wealth for millions in the country, and we want to become the wealth platform. So basically, customer, wherever they want to whatever product they want to invest in, everything is available on one single platform for them. So we'll continue doing that. And for the proceeds, specifically on the proceeds, so we have been profitable company operating operationally. We have been profitable, so company does not need too much capital, and that's why there is a bigger OFS component. For primary component, we have around 1,000 crore approx, and that we are putting into one is the brand, building the brand, which is very important for us. Investing in the technology, which is again core. Tech is the core for growth. We don't have, unlike other consumer platforms, we don't have anything physical, so everything remains tech. So we invest there. We just recently launched a product called margin trade funding around a couple of quarters back. So that is scaling now. So for that we need, and then we have an NBFC arm, so small amount of capital there as well for launching new products like loan against securities and so on.
Your DRHP shows a healthy AUM growth and investor growth. Where do you see the next leg of AUM growth coming from? Because the regulator also wants inclusion of all. And if you see, if I'm not wrong, your investor base is around 1.81 crore active users. So how do you see that?
See, if you compare the size of India and so on, the number of customers is still very number of investors still very small. So that growth will continue happening, right? Second thing is the wealth still is in traditional assets, like a lot of traditional assets, and that is now slowly moving into financial assets. So that will continue happening, right? And as these two happening, and we one unfair, or you can say advantage with us is our retention is very high. So customers, when they come young, so our median used to be 27, now it is 31, and as they keep growing in their lives, they keep getting wealthier, and they keep investing more. So your AUM cohorts continue growing, right? So if you look at the cohort of customer segment, so I think this compounding will continue happening for many years in the future as well.
If you see, the retail participation has really ramped up in the past few years. For Grow, how much of it has been structural long-term growth versus the the bull run growth?
So as I said, I think India will continue growing. India's wealth will continue growing, and then the people moving wealth from traditional to, so capital markets will continue growing, and Grow is like a we were also lucky to start at the time when this started and so on, and the growth kicked off. That will continue happening. It's like a more secular growth across the participants and capital markets and so on, and I think that's how we look at it.
If you see, basically your DRHP also shows that there has been equity growth in the broking space. How do you see Grow as? Will it be more of a trading platform, or it will be mutual fund long-term investment is where you see Grow growing towards?
So Grow is positioned as an investing platform. Now let's say there will be all these millions of customers that we talked about, they come for one of the products. So we are around 14 plus products on the platform. Customer comes for one of the products, then they buy more products and so on. And every product has an attach rate. So today, for example, our stocks attach rate, we have put it in the DRHP also, is the highest. Then there is a mutual fund attach rate, and then there is a derivatives quite around 9 to 10% attach rate and so on. Abhi MTF will launch, it will also be attach rate will be small. So there are some products which are democratic, millions of customers would do that, like stocks and mutual funds. These are two big anchor products, and then there will be some products that will have smaller attach rate, high ARPU and so on. But every product has different economies. But we, as a overall, we look at the platform. What customer needs, what we need to serve the customer for with what product, and we'll keep launching those products.
How do you plan to get tech and while keeping it simple and also making sure that the compliance is taken care of?
So one thing is like for compliance perspective, we do only regulated products. I think one thing we call internally is like we are fintech, which is like regulated, like most compliant, and then we are a financial services which is most agile, right? So kind of we are kind of that. And tech wise, see, our DNA is tech. We are techies. We don't have any we have engineering background and so on. So the core of company is tech based, and we continue investing in that. So other thing is that we do everything in house. So all the infrastructure that we do, back office, your support, your payments, onboarding, everything is kind of in house. So that gives us power over the customer experience, and also from the economy's perspective, it works out to be like it gives us operating leverage. Your revenue continue growing based on your users and ARPU and so on, but your cost, they kind of don't grow linear to revenue. They grow slower than the revenue. So and hence your EBITDA margin also continue expanding.
What has kept the company, profitable? Because to be profitable in this space is very difficult, especially fintech, and a lot of competition is also there with Zerodha stocks. Many new coming up. So how do you make your positioning? How do you differentiate yourselves, and how do you keep yourselves profitable?
So growth positioning is very different from so if you go in like smaller cities or their Grow is like household name for mutual funds and stocks, right? So that is like the positioning, and then profitability is because of the side, like everything is the three cost factors that we have. Cost to grow, which is marketing. Most of our growth is organic. More than 80% of our customers are organic customers. So your cost to grow is much lower. Cost to serve, which is like mostly variable cost, tech cost, because we do everything in house. So that kind of continues falling. Third is cost to operate, which is like fixed cost, which is mostly your tech engineering talent and so on, right? That also like that does not grow like as your revenues grow, right? So there's a operating leverage works like a software company, like an internet company, and that's how like you become profitable.
And how sustainable is this low cost growth? Because now customer acquisition cost would also increase, and now SEBI recently came up with a consultation paper also where they want to reduce the expense ratio, brokerage rates, and how do you see that will affect the business going forth?
So the first part first, like which is about so profitable. I think as we grow, like because of the operating leverage, your kind of EBITDA continue expanding, right? So that is like because of the tech nature of the business and so on.
And the sustainability will.
And the sustainability kind of maintains there. And the second one was, sorry, I missed the second question.
The second one was that SEBI is also coming up with reducing the expense
So what
ratio.
happens is, see, SEBI's goal is to kind of grow the capital markets and also do customer protection, which is what Grow's goal is. So it's more or less aligned, and if you see since last 9-10 years, all the progressive regulation that SEBI has brought in has helped us grow. Like account opening, like in 2013 when they introduced direct mutual fund. If they had not introduced that, there would be no Grow. If they had not done Aadhaar based KYC and so on, Grow would not have been there. We would not have been able to open like 18 million accounts and so on. This entry load removed on mutual funds. So you can say like this is in tech world, like it is like even if these kind of things happen, because it builds a lot more trust in the markets, it removes a lot of friction in the market, the growth happens in spite of all these things happening, which is good for the market. It's also good for customer, right? In general, our belief is that what is good for the customer will be good for the business in long term.
And how do you guide the investors to sort of do long-term investing and not fall for the social media trends? Because most of the young investors take all their knowledge from that. And also, if you would like to tell any targets which you have for AUM or investor base going forth.
Yeah. So in general, what if you look at all our content, so we have like lot of educational stuff that we do. So we have something called Grow Digest, right, which goes every day, and then weekly we also send them kind of a very nice story. So we also did a book, by the way, with those stories and so on. Then we have a lot of videos, YouTube channels and so on. And if you look at consistently, we always talk about long. I mean, that's the result. That also results in, so if you look at our overall SIP growth, SIP book and number of SIPs and so on, right, 1 in 3 SIPs, highest SIP book, that kind of also is the output metric of that effort and so on. I think people are now kind of now have got this feeling, how kind of long-term investing is better than, so it's win-win, right, because entrepreneurs are working so hard to grow your capital, in the country.
And any AUM targets or any investor base increase if you see?
So targets, the way we look at it is the market is very, very large. We are just getting started. AUM wise, we are like 2.6 lakh crore, which is like, if you look at overall India's AUM in capital markets, that's like huge. If you look at AUM across traditional assets, that is even bigger. So we like kind of compounding faster. Like, how can you kind of do that? If in general, like, goals are like temporary, right? You achieve that goal, what do you do then? But instead of that, create a system that kind of growth hoti rahe basically.
All right. Thank you so much for speaking to Business Today.
Thank you so much, Riddhima.
If you like the video, do like, comment, share and subscribe.